Hey everybody, this is Booksy again, and I'm going to just do a quick TA update, and then I'm going to get into some volume for Ater. And I'm also going to talk a little bit today about some fundamentals. I know that, we had the earnings report the other day, and that was followed by a large after-hours run up to just about like $8.30, something like that. And when it ran, I wasn't really surprised. On the previous video, I said I thought it was going to pop. We would see a pop and maybe return to the top of the wedge area and then maybe retrace. And in this case, we have a gap now that goes all the way down to like 620. I don't think we're just going to keep running. It's possible that gaps don't get filled, but typically algorithmic stocks, I mean, like all stocks run on some algorithm of some kind, right? Some combined algorithm because computers are trading it, right? Hedge funds aren't sitting there clicking the buy and sell button. Big institutions are not doing that either. They're using algorithmic trading to do that. And so typically when you have a gap, if you're new to TA, it doesn't have to get filled, but it often will. And it usually has to happen in regular trading hours because this is about price discovery. It's making sure that the bid and the ask are given like a fair chance, essentially. Like they want to see the buy-in at different levels. The algorithms desire that data. So if it skips it during regular trading hours, like if you have high volume overnight, that's not high volume in after hours is not a good indicator of anything because high volume in after hours could be very insignificant. If you look at like the quantity versus normal trading hours on the day. And so, any kind of after hours move up or down, you always have to take it with a grain of salt. Like it's probably not 100% accurate. And then, you look at things like this where, this is just really quick, and then I'll get onto the bigger picture here. We did have a little gap down this morning, and we haven't filled it yet, right? So my expectation is I don't think this will just run up and up and up. It is a little bit on an uptrend, right? A higher low. But if you look at the volume, all right, and this is what I'll be talking about a lot today. If you look at the volume, look at the major candles. So there was a little bit of battling yesterday. This is yesterday. But look at the major candles. What color are they, right? They're red. You do see some green here, but they're pretty low compared to these red ones. So definitely sellers have the edge right now. And if you go back and look at the day before, you can see that there was a lot of green, right? And high green. And that indicates buyers having a little bit more of an edge. And so we're on an uptrend, okay? So every day, you're looking at the charts for direction, but you really should also be paying attention because sometimes, you might see this chart rising a little bit, but if you start noticing like, okay, well, man, these sellers are coming out in force today, and I'm not seeing buyers to match it, then you're probably looking at another drop, right? You're going to look at it turn. So good news, if you're following gaps, we do get a lot. I mean, this is the 1 minute, so it's kind of pointless anyways. 1 minute's not really very telling of many things, but we did have a little gap down around 860. I think it was 861 down to like 830, and then we've got some other little gaps here and there. Most of these have been on this wind down, have already been filled right in this area. Okay, this is price discovery, right? For anything that gaps, we probably have already retraced that area. But I want to talk a little bit about the cycle. So I'm going to shift to just talking about the cycle in general, what I think might be going on. I have some theories. Unfortunately, there's some maybe some confusion about what I said when I said it was going to change. So if you recall, and I guess I should look at this one on the daily. I got two charts pulled up. And here we've got the main one. This is the one I showed off the other day in the last video. I'm not going to go over this again. If you want to watch the last video, go for it. It explains it in a lot of detail. It was really long. I'm sorry it was long. I just really wanted to go in depth and to my reasoning so that I could make a case for this and not just say, hey, trust me, right? Like I know a lot of people are kind of, that's the joke now, is that anyone who brings a theory, it's like, hey, just trust me, and then nobody wants to trust them, right? But I tried to provide a pretty extensive rundown technically of why I think this is a good trend to adhere to. So basically we have 3 cycles that are short, 46 bars, 3 cycles that are long, 74 bars, 3 cycles that are medium at 67 bars. And each of these cycles contains an action like this, where we have a dip, like a cup. I'll call this the first U. Then we have a period of, I wouldn't call it consolidation so much as a wedge, and often this wedge is descending, though if we're in a bull run, it can be an ascending wedge. But what typically happens every time, and this is why I started noticing this trend, is that we break down. Even when we're going up, right, we break down. Even when we're going down, right, we break down. So it's not following traditional TA patterns. Like a lot of stocks, if it's a descending wedge, you kind of expect a reversal because it looks like sellers are getting weaker. So you don't expect it to just dump all of a sudden. But in this case, it's definitely some kind of composite algorithm that's causing this price action. And I said my thesis is that I don't know if this is one institution or a bunch. I'm guessing it's a bunch, but I think there's probably one main one that's causing these sell-offs by essentially just opening a really high short position. Okay, because they're not selling. I mean, if they were selling off from what, like up here, they're going to lose money, right? But instead, they're opening a short position. They may open one up here at the top of the wedge. They open up a short position. They tank the stock, okay? When it gets down bottom, they start covering the short position they opened here, and they probably cover the short position they opened here. They hit this point, okay, maybe they do it again, one more time, open up another short, that's really short term, it drops it again, or perhaps what we're seeing is the sell-off, all right, from like some buy orders that they maybe placed on here, but I don't think so. I think they're pretty smart. They're probably going to let some of them go down on this way, so say open a bunch of short positions in this region, all right, then they let go of those short positions actually here, right, but they're opening like a huge one right here. And then they're covering the first huge one here to get a bullish run, all right? And then they're probably covering like the other short positions here, right here, okay? So I don't think that a lot of these, like there might be some that they're holding on to from like each of these dips on each cycle, that then they, you know, when they find a really low point that they like, they get rid of them and cause a big run, like these massive candles. But I also think that for the most part, if you look at these, they're pretty habitually like red, 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 green, 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 red, 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 green, 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 green. I mean, you know, there's a little bit of change in the middle here as buyers and sellers compete, but basically it's just a way of getting bulls sort of trapped in the play, right? So bulls will run it up in this case, right? If it's a downtrend, bulls will run it up. They think, oh, it's going to reverse, right? It's making new highs. It looks like it's going to reverse, but then they immediately just start shorting it, selling off from their buys down here. So they're accumulating, they're doing a lot of stuff, right? They're covering their shorts, they're accumulating buy orders, and then they're selling off here and accumulating new shorts, and then rinse and repeat, right? And they can make a ton of money on this thing. So that's all the detail I'm going to go into about that right now, but that's basically what I think is happening on this stock and why all these charts look basically the exact same. So the cycle starts on the first dip, or excuse me, I guess you could call it the second dip once the cycle starts, right? So you have this first dip, which is out of the wedge, and then the second dip creates the new wedge. I mentioned that a lot of times the wedge points to the bottom or the top, depending on which way we're going. So in this case, we're going a bullish direction. It's pointing to the top of the new wedge. And then in this case, we're in a bearish direction. It points to the bottom of the new wedge. But things changed here because the apes got involved, and you see this massive volume increase. Okay, and it looks like for sure that the float is higher. Like the amount of people that are trading this stock is much higher, and we're at a much higher value than we were right here, right before this volume ramp up. So yeah, again, I'm going to talk a lot about volume and what these indicators mean. You'll notice some of my lines look really whack right now. That's because on different time frames, you know, obviously if you're charting, the indicators don't always line up with your lines. But I just want to talk really quick about some basic stuff with some of these indicators. And then I want to get into what I think is going on finally with the cycle right now. So I don't want to anyone get disappointed, but basically first I'm going to talk about the volume, and then I'm going to talk about where I think we are now and where we might go based on the volume. So if you look at this volume chart, it's really hard to read because there's not a lot of volume prior to this date right here, which, you know, honestly, it looks like the major volume picked up on this bull run, and it did. Some other folks in the Ater Discord pointed out that was when a lot of the meme stocks, quote unquote, were running, and I agreed with that. But it really, if you go back a little further, let it scale, it really picked up right here at this earnings call August 9th. And it's a green candle, but that's because there was a huge jump right after hours, and then it just kind of ran up some. And it is a large candle. It's like 9 million, okay? And I've looked behind the scenes at this stock, and it is certainly a very, like, what's the word? Like, well-traded stock, okay? And so, essentially, what I did, I'm going to pull this up real quick, is I went and just looked to see if, so this is Mohawk Group's holding, which is ATER, and I'm on whalewisdom.com. I couldn't, on Fintel, you have to have like a subscription or whatever. I don't have a subscription to Fintel, so I didn't get to see a lot of the numbers, but this is actually pretty good. And you can see here a lot of funds, right? 13 funds in the very beginning, which is not a whole lot, but by now, look, we're at like 79 funds holding this thing. So it's important to note that the funds, especially important to note that a lot of the funds holding this got in like over here. Okay, now I can't obviously tell if a lot of these are short. My guess is yes, like a lot of them shorted down to here. Some of them probably covered on this run, but I think a lot are waiting for a confirmation of reversal, and we're going to get that as we start making new highs. All right, we haven't confirmed a reversal yet. And I know that might be upsetting to some people, but if you look at previous highs, the previous high was back here, okay, right on this marker, which is on June 9th, okay? And this previous high is around, I think I've marked it at $21. We didn't reach that on this candle. So we're still at a lower high. All right, so these were the high points. We're still at a lower high. So we need to see this thing break out and get above. Well, first we want to get above this high, okay, which appears to be $19.10. We break out, we get above $19.10, and then especially if we get out and we break above 21, we can confirm that this is now on an uptrend. But we can't make that confirmation just yet, okay? So, anyways, back to the other chart that we were looking at, okay? So this right here is a lot of good data, okay? Institutional ownership is, you know, pretty high, but then if you look at hedge funds, it's only about 1%. Now, hedge funds are 1.5%, well, not even 1.5%, 1.25%. Hedge funds are the main guys that like to short stocks. They tend to be the heaviest shorters. So even though that's only 1%, that they could still be opening like quite a bit of short positions. And you can see here that the prior reporting number before this Q2, we don't have data for Q3 just yet, so it's not compiled yet. This got higher. This is 1.21 and this is 1.28. So we're talking about more hedge funds coming in, more shorts. And that makes sense because this thing started downtrending, right? And so more than likely a lot of them jumped on and just pushed the price down, took a big short position, okay? You'll notice here that the new positions has decreased, okay? the amount of people making new positions, but people who've increased their positions, and then people have closed their positions as well. So a lot of people close their positions, some people increase their positions, all right, so on and so forth. Now, coming down here, what's good to look at is who's holding kind of the most and who has the most to gain, right, or to lose. So if you look at this, this MacArthur group, now it says here that they own 4 million, but this number is about to change. I dug into it and I looked at all their transactions. You can click on this and look at their different transactions. And basically, the MacArthur group, more recently, here I'll bring it up, they actually sold off 1 million, okay? And before you go and say like, oh, these guys are out to get us, all right, this is a trust, and I looked into it, and it's like a trust fund for kids or something. Like, it's some kind of a, I don't know if it's a charity or if it's a scholarship program, but it's some kind of a trust fund, and it says it's for kids. That doesn't mean it is. I'm just saying I wouldn't go shouting that this is some kind of a short attack or whatever. They sold off, and they sold at 771. And what's odd is that this is one of the earliest funds in the stock. They actually got in really early, and they built up over time their shares. And it says it's 100% of their portfolio, and they started to sell off more recently. But they were in since, you know, early on. I think it was like April of 20, I mean, it was like right around here. Okay, so they're not selling this thing. They bought here, they bought like through this area right here. They're not, maybe it was like over here or something. They're not really selling this thing for like a major loss. They're kind of like cutting their losses, if anything. I think what happened is it ran up, it ran down, and when they started sort of breaking even and going negative, they started to sell it off. And again, I don't think that's necessarily like a bad thing if you're running a trust fund and you're invested in a stock long term, and the stock doesn't look good. You may want to sell it off. That's their responsibility. So that being said, I wouldn't put too much stock into that. This right here, Ater Deluge, this is the primary director, right? So they were given these shares, these 2.5 million at the beginning of the stock, the second day. They are not selling, you know, anything. They're just holding it. But then look at the next one down. Look who it is. It's BlackRock. Now, BlackRock is well known for their interest in AMC and the 8 movement. They've largely been considered a bullish institution for these quote-unquote meme stocks. If you look here, the source date for this is 9/30/2021. All right, and that's, you know, that's significant, okay? So 9/30, if you go back to 9/30/2021, that's September 30th, right? Where is September 30th? Right here. Check it out. That's right around like that run at $10. Okay. That's right? August is the 8th month, September is the 9th month. Yeah. Okay, so they've lost money. So we have a bullish institution, BlackRock, who has lost money on 1 million shares. So if you guys are feeling the burn right now, maybe you've been in since up here, imagine owning 1 million shares at like $11. You're going to be a huge loss, 50% loss. They're down like $500,000 right now. All right. So you better as heck believe that BlackRock is going to want this thing to go up. And they think it's going to go up. They think it's worth more than $11. They're long on it. All right. That should be very bullish for everybody. And it also might be a good indicator of like them understanding that this is not maybe it's not a super short-term thing, but they're comfortable getting in here alongside the apes. All right. So I'm not going to go into any more of these like institutions today, I can't tell you like who is, and there's Vanguard. I can't tell you who is another kind of bullish institution. They got in earlier than BlackRock, but we can't. These are all long positions. Okay, they're holding these shares, so this is a lot of money being held. Now, that being said, how much do the retail population hold? Well, you can come visit the site, find out for yourself. Again, it's whalewisdom.com. You look up the stock. It's still under MWK. If you look up ATER, it should come up. But if you go to ATER, the information is really sparse. You have to go look at the original ticker symbol, because this SEC filings from ATER are not. There's like 4, and this has like dozens. So, anyways, that's that. Okay, that's my fundamentals for before we get into the volume. So maybe you understand like how many institutions are at play in this, and why. Again, I think that. Even though retail is getting in now, they're not in that, they're coming in force. This is huge volume. This is not all retail, all right? We talk about BlackRock September 30th, 2021, taking a long position. That was probably this candle right here, okay? So we're not talking about, oh, it's every time it goes green, it's a bunch of retail. Like, it's not. Sometimes it is institutions buying. Or I'd say a lot of times it is. So that should be encouraging to you going forward for more of a bull thesis. I think that a lot of bears are just looking at the trend going down over the last year, and I think that's valid. Since January, it's been kind of doing nothing but diminishing, but it's not without stuff going on in the background, okay? So let me take a look at some volume stuff real quick. So one thing I noticed is that each of these cycles, if you look right here, each of these cycles kind of begins with a sell-off, right? Which, I mean, technically I'm marking the cycles as beginning on the second U because of that very first one, including this. But really we're talking about like this being like what kickstarts this movement, right? So this kickstarts this movement right here. And if you look, there's almost always, relative to the area around it, okay, you can see right here there's a big sell-off too. But relative to the area around it, there's usually, okay, some spikes in selling. Sometimes, and if you look over here, we have to kind of like zoom in. So I'm on the daily chart right now, but you can kind of see where these spikes are, but I think a lot of these are just institutional. But you can right here, you see how it's kind of low, and then it just boom, like there's a huge dump. Same thing right here, it's kind of low right before, actually it happened back here, right? And unfortunately, this thing's getting stretched to Kalamazoo, because you can see this spike though, right, in volume. Relative to what was going on right before, it's a spike. So that's kind of what every time we see this happen, there's like a spike, and then there's maybe a second spike on this bull run, and then there's volume exhaustion. Like volume starts going down and down and down and down and down until, bam, they act on it again. There's a little bit of a volume spike relative to the area around it, all right, and then it starts all over again. We get a volume ramp up. In this case, it didn't ever come down because this was like a big bull run. All right, but even here you can kind of see, if I were to draw like a line, you can kind of see it's like slowly diminishing, and this is just basic stuff, right? Like there's a volume trend and bulls are in control, but the bulls are losing momentum. And if you look at some other indicators, you can see that as well. If you look at just the accumulation distribution indicator, this is like a big one, right? So it's hard to see it on this time frame. It looks like it's just sort of following the stock, okay? But let's check out like a 4-hour. So the accumulation distribution indicator, it shows you a lot of good information about momentum, but it's really like, it's like whether or not people are sort of, and a lot of times it's not just, institutions, but really everybody, right, in the play. So it is going up, but you can see that it's not as strong as the chart looks. You see how the chart is like really going, and this is kind of like flat. and it has a little spike, and then it starts selling off. This would indicate that, yeah, it's going up, and maybe right here everybody was like, whoa, it's going to go up really, really high, but it started turning right pretty quickly. And if you were watching this at the time, you would want to have probably gotten out here, and that's, you see these kind of second sell-offs, right? Big sell-off, big sell-off. I think a lot of people who got in down here were probably selling up here. If we go to like a closer time frame, let's look at like the 1 hour. All right, the 1 hour was going down already. So here was where you would have, if you were watching this indicator and you were looking at all time frames, this would have been your trigger right here, right in this region when this sell-off occurred, right? This manipulation of the stock by the algorithm happens every cycle. When this occurred, this AD line on the 1 hour started trending down while the stock was trending up. That's the divergence, and that means that this thing is about to reverse. So you see how it's going down, it's really not doing well. Bulls are losing momentum. In addition, if you look at this volume oscillator, right? If you look at this volume oscillator, and an oscillator shows you like, it's basically like a ratio between short and long term. So a higher percent above 0 means that the trend can be more or less confirmed as being pretty bullish. It does oscillate. I mean, it's not perfect, right? But if you look at, I'll just use like a vertical line. So yeah, I mean, you could see here, like, even though this is going down on the oscillator, it's pretty flat. And that means that there's not a lot of buy-in to this idea that it needs to drop, right? So it looks like it's going to run, and it does. It runs again, and then it's like, okay, when it starts turning, buyers are getting kind of exhausted. It does sort of round out here. It's still going up, but the oscillator is coming down, so it's like, all right, we're losing a little bit of momentum. And then how much conviction is there in this red? Well, it does drop here, just where the oscillator drops. But then there's like follow through, right? It just continues. And this would not be the only thing you would look at. But essentially, like, if it's a positive value, then you're talking about like a confirmation of the trend, okay? Whereas like a negative value or a drop or a decrease could indicate, you know, that the trend is going to reverse. But one thing that's interesting about a lot of stocks is that they come to these sort of, and I may have got that wrong. I might have mixed up my indicators and my explanation. So if I got that wrong about it being a no, I was right. It's the distance between the fast moving and the slow moving. Okay, I'm sorry. I get confused with this other one. I'll talk about VFI in a little bit. It's just my brain. I have to like remind myself all the time what I'm looking at, because if you go bounce between these oscillators, you have to just remember like, oh, this is a different set of rules. Like, you don't always interpret them the same way, obviously. And so when I'm looking at this, I see this as like narrowing. You see that? And then if you were to just keep charting this, you see how it breaks out here? And look where it breaks out. There's a lot of conviction right here. And so it's negative, right? It's kind of like, well, we don't know. Maybe this isn't going to hold, but it's not staying positive. And then boom, it goes positive on a downward move. So that's like a trend reversal, right? Like we've got a downward move. The oscillator is going up. We're at a place where now like sellers are the ones that look confident. Okay. And then it does kind of bounce around a bit, and we sort of start a new channel here, all right, a new wedge pattern. And not surprisingly, if you were looking at this, okay, it kind of lines up sometimes, not always. You can see right here it didn't really, but it kind of lines up with this breakout point, okay, where there's this major sell-off. In this case, it was the very first part of this wedge, and in this case it was with this major sell-off here, and in this case, you know, it's kind of the start of this pattern. So it's not perfect. I mean, you couldn't say like every time this has to be correlated with this beginning of the wedge, or every time this has to be correlated with the beginning of the drop. Like it does correlate with it. You can see that the spikes correlate with the sell-offs. but it's not something that you could, it's more descriptive, not prescriptive, okay? You would have to look at multiple indicators to sort of figure out maybe what's going on the whole. All right, so I'm going to talk about that a little bit more. If you look at this, not surprisingly, we appear to be in another wedge pattern, albeit much shorter. And if you look, we just had a break above that wedge pattern, which may or may not indicate, okay, that we just experienced a shift in the cycle, or that we're coming to a place where the cycle is about to shift. And you can see here in these cases, it spiked right before the shift. But I think there's a case to be made for two different theories here, and I'm going to get to that in a minute. So, all right, I know I said this would be shorter. I have no idea how long it's been running. It's probably running like a long time, but I'm going to do my best. I think it's been 30 minutes to kind of like wrap it up. So basically, this indicator is good on the 1 hour. I wouldn't really rely on this indicator too much unless you're just looking at divergences and the accumulation distribution indicator. This indicator down here, this one's better for a little bit, I think, mid to long term, but it kind of got out of whack. And you can see it's been on like a steady sell-off trend. And that's kind of important because this is the direction that ATER has gone for a long time. And it's very odd. In the very beginning of this stock, if you were to look at this indicator, it does go positive quite a bit, indicating like a lot of accumulation is occurring as opposed to distribution. But it's gone negative, and then it only shot back recently, but it went right back down. It really harshly corrected to sort of retouch this line. So one thing I would be looking at for volume is that this indicator starts uptrending away from, kind of like it did here, but really like get back up to zero. And right now we're way down. This is like negative millions. And this is like, I think this is a cumulative indicator, so that's part of the reason why these trends look so exaggerated, even though the stock price isn't like that extreme. All right, let's talk about this indicator real quick. This is the CMF. I've been using this on AMC quite a bit, and it's been really helpful. It's very accurate on AMC in terms of tracking accumulation and distribution amongst institutions. And typically on this stock, the range is 0.15 to negative 0.15 that you're going to kind of look at. And really all that is just sort of like it's like a standard deviation of the zero number for this particular indicator. Meaning like normally, if it extends past 0.15, then it's thought to be overbought. And as it reverses and it breaks typically twice, in this case it broke 1, 2, probably like 5 times here, but you would look at this where it's rattling around here and say, okay, I think it's done. I think it's about to sell off. It kind of happened right here too, right before this sell off. Not so much right here, you know, because it was already like really oversold. So, but here it's overbought as all get out. And as this starts passing down, as it's moving down, what this means is that institutions are starting to sell. This tracks money flow, and it typically tracks larger money flow. So as this sells off, okay, obviously the stock is going to drop typically, not all the time. Depends on what else is going on. And then you would look at this as, okay, we're below negative, keep messing my numbers up, negative 0.5 here. Why is that not sticking? There we go. Okay. It's kind of hilarious, but you get the idea. There we go. But then as it turns, you would say, okay, right here, if you were watching this, all right, right here when it breaks, you might say, okay, I think institutions are buying in. And sure enough, we had a run right after that. And this indicator had already kind of started turning. Now, obviously, if you're watching that, TA, all these other indicators for volume and whatnot, you might see that writing on the wall. But here, there's uncertainty, right? It kind of bounced at this zero value. It never really went positive in strength. And so that's where I would have been like, well, this doesn't look good. We're still climbing. This is the top right here, but this indicator is not climbing anymore. And that tells me that there's institutional uncertainty. Some of them are selling, okay, and then they're going to sell off. Now, I'm not advocating that we follow smart money. I'm not using this to make day trades. All right, let me be clear. I don't day trade because frankly, I'm just not quick enough to do that, and I just can't interpret data fast enough. But I look at this to analyze what has happened so that we can go forward in more strength. And I want you to see something real quick here. So I had charted this out way back at this point, and if you look here, this has been a pretty surefire region of like kind of support, if you will, where typically in reversal, right? Like we reverse in this region a lot. All right, 1, 2, 3, maybe 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. And these are, what I mean by reverse is that not necessarily the stock reverses, though sometimes it does, but that the indicator reverses and starts heading back towards accumulation again. Because I think these are bargains. Like I think institutions are like, oh, hey, I like this, I'm going to buy it. And I want you to also notice during this region, remember how I was hypothesizing that I had a theory that this is a big accumulation and distribution? Like there's a lot of selling and buying going on between institutions, not between them, but just with the stock, where there's like a big short sale, right? A big sell-off. Well, look what happens, right here. There's just this big boom, drop down, and then immediately we go back to accumulation. Why would they do that? Well, they're shorting the stock. Maybe they're covering their shares. Maybe. I think they're probably covering here and here a little bit, but they're making profit on this short, on the short positions they accumulated here. So there's a lot of buying and selling, obviously. But then also they're accumulating, right? They're making buy orders. See that? And so they're not just selling off and trying to get the stock down. They're also getting ready to like ramp this thing up and profit from these runs. Now it went a little crazy here, but even within that, there's still some buying and selling happening. So I just want to point out that this indicator right now is in a really strange place. And I've looked at this on a lot of different time frames. If you look at it on like the 4-hour, you can kind of see it more concisely. It is in a very odd place right now, but I want you to notice something. Check this out. So right here, look what happened. This is like gold to me. There was this almost double bottom, right? But not quite. Now, you might say, hey, confirmation bias, kid. And I'd be like, hey, I'm not a kid. I'm just a guy. But my point is that usually, where did this occur? It occurred right before the major sell-off. In both of these cases, right before the major sell-off, and then there was an accumulation that started, right, in this area. It starts ramping up. Right before the major sell-off, boom, and now we're in accumulation zone. But in this case, it didn't turn, I think, where maybe we expected. And if that's the case, if this is, in fact, right before, then we would have to respect that. But there's some odd things going on too, right? So like, one of the odd things I noticed is that this isn't always consistent, okay? If you look back here, in this case it was going down. In this case it went up, kind of in this region. We're looking at where the cycles change. In this region it went up a bit. In this region it went up a bit. And in this region it's going up, which would indicate to me like we're probably going to see some accumulation soon. You're going to see that ramp up. But it's not really lining up the way that it did in the past. And I think part of that is because we are either A, we're on an accelerated cycle, okay, or B, that the cycle really hasn't even started just yet and we're about to see a big drop. Okay, so either this is the drop, and because it's accelerated, this isn't really lining up like it did before, and in addition, it's in an extremely negative number. This is way beyond what's happened recently. Meaning there's a lot more short pressure, but then also like probably it means that just more institutions have their hands on it right now. All right, and I think we might see a bigger, longer, I don't know for sure, reversal. Okay, Or it could mean that this thing's going to have to stair step up slowly because we're so overextended. Again, you can't base it on one indicator, but I've had this music on the whole time, I noticed. I'm sorry. Hey Alexa, turn down the music. Just turn it down a bit. It's getting a little too dramatic. So right here, all right, it looks like a double bottom maybe on this line, and then maybe we'll continue back up. Okay. So now let's get to like where we are currently.